CNBC-TV18, embarking on a quarter century of excellence.
Japanese Nikkei index, which is trading with over 500 points in terms of a cut.
Functioning of the NARCL, some kind of restructuring could be considered by the government.
2681 is the 20-day moving average on the Nifty. And that is the first level which the market will sort of test.
Then you keep your stop loss at around 20,950 and you play the long trade. But let's see how it goes.
The discussions will continue, and by the end of the day, we'll have clarity on what exactly happens from here.
As of November 2023, value of investment in company and subsidiaries were about 3,817 crore.
The first tick on the index is down 120 points.
I see it as a very normal shakeout. I think India's outperformance in the world will continue.
Market goes through such phases of correction because we have a lot more room to gain in the years to come.
Large block, nearly 12% equity got changed hands in Avionics now.
And we hope to see revenue from this new plant in the second half of calendar year 24.
The mid-cap index for the markets as a whole, just this beginning 1-2 hours of trade has been so volatile.
92.8% of the cases are home-related, isolated.
It's been a relief of sorts after the mayhem that we saw in the second half of the day.
Well, that's the day so far, and it's been quite a day after the day that we had yesterday. We are coming to you live from the CNBC-TV18 Motor Rosewell studios. This is Closing Bell. I am Prashant. With me, my colleagues Reema and Mangalam. Guys, hi. Afternoon.
Hi. The Bulls have wrestled control back from the Bears today.
Yeah, I think so. I don't think they went anywhere. They were just maybe taking a day off.
I'm not sure whether it's wrestled control yet or not, but as of now, they've taken a pause for breath. Bears, if you must. And Prashant is back. Prashant was saying that the reason why the markets fell yesterday was because he wasn't there. And now that he's back, we've seen a strong recovery as well. Would you take credit for that, Prashant?
I came with full force. Green.
Yeah, green on green.
Green.
With reindeers on your tie?
I think it's a wolf.
Or
is it a fox, I think.
Okay. From far, it looks like.
Somebody else also asked me today, so I should probably look more carefully.
The red, the green, the brown, and the white. It looks a bit like reindeers.
Absolutely. Well, you know, it's a much better looking screen, right? And yesterday, of course, was, as someone said earlier, a bit of mayhem. We were down about 300 points, by the way, on the day yesterday. And it's a good recovery. And it's also true that it's been a little volatile. 40, 50 points, just sort of, you know, fleeting 40, 50 point rallies and then sort of give backs. And we've seen at least 3-4 of those just today. So I think what's happened is that the market has kind of become a little light after the very large drop yesterday. And, you know, people are just trying to sort of make up their minds about what next, what are the next steps in that sense really are. So just to tell you what technically and just sort of chartically speaking, what are the important levels? You know, because we've seen a large enough fall, so from the highs that we had yesterday to the low that we had today, if you take a simple sort of retracement, the 61.8% retracement of that fall that we've had, it's a 2-day fall from the high to the low. It's worth about 450 odd points or so, 21,360 on the way up. So is the number on the Nifty. Bank Nifty, the recovery is a bit more middling. I mean, it's not really as forceful as what we're seeing on the Nifty. And similar retracement of the Nifty Bank, the 61.8% from the high of yesterday. Although, by the way, unlike the Nifty Bank did not make a new high yesterday. Is 47,690. That is the number to take out on the way up, very close by, around where we are right now. Mid caps and small caps are doing much better. I think we'll need 1-2 more days of kind of stable trading. We've seen that so many times before you're able to say, as Reema was saying, or what Mangalam you were saying, out of the woods or not out of the woods. I think time will tell, but I think a day, 2 day more of this kind of price action, and I think we should be back on track. Reema.
But, you know,
yeah, sorry.
I was just saying that for all practical purposes, the expiry trade for the month of December will start tomorrow itself because it's a 3-day long weekend that we have. Friday, Saturday, Saturday, Sunday, Monday.
Monday's
right?
a holiday.
Monday's a holiday. It's Christmas.
25th.
Oh dear, you just made my week.
Okay, so now you have good news. So you just found cash in your jeans pocket. That's exactly what happened. So The expiry trade will happen,
So today you've got the weekly expiry
For
trade,
Nifty,
and
yes.
from tomorrow you're going to prepare
Monthly.
for the monthly expiry, which will happen on Thursday, but it's going to be a truncated week. But it's a pretty good recovery, right, from the day's low. Now compared to our all-time high levels that we hit on just yesterday, that's 21,593. The Nifty is close to about 350 points away from that level. Look at the recovery on the mid-cap index. The mid-cap index lost 1,500 points, and today it's regained about 500 points of those, 1.6% higher. Very strong advanced decline ratio. It's the CPSE, the PSU is leading the pack today. Leadership continues there. CPSE index up more than 1%. The Nifty Bank, if you pull up the contribution plate of the Nifty Bank, while the Nifty Bank is absolutely flat, it's what ICICI Bank and Axis Bank are giving in trade. It's HDFC Bank which is making up for it and a little bit more, which is why now the Nifty Bank has a gain of close to about 150 points. Keep your eye on Bajaj Finserv. There have been some sharp swings in Bajaj Finserv in the last 1 hour. And as we pointed out, it's the PSU pack leading the rally. Oil India, IRFC, SJVN, IREDA. These are the stocks which are up 5 to 6%. And by the way, Brent is now back above $80 per barrel.
Yep, it is. And we'll keep an eye out on the upstream oil companies on the back of that as well. Yesterday, we did see a big move come by on Oil India and ONGC. But speaking about expiry itself and the way the market set up from an F&O standpoint, what's interesting is that yesterday the decline was excessive and now the recovery was understandable. The question is what happens from that? Because yesterday the put call ratio had fallen to 0.66, which is usually, which tells you that the market is likely to have bottomed out with the ferocity of the fall that we saw. And it fell from about 1.14 the previous trading session. Now it's back to 1.14. Does the market move further higher from here or not? Well, in the recovery, what we've seen is that the bulls have seen that there is support at lower levels. So that's why we're seeing that 21,100 put, 21,200 put, both of them seeing a fair amount of writing. And these are options that expire just in the next 1 hour. So obviously, they are looking to eat the premium on all of this. However, the way up, the Nifty is around that 21,250 mark. There still are 2.5 crore share writers at the 21,250 call. So if the Nifty sustains at these levels itself for a bit, these call writers will be caught in the wrong side and perhaps they will have to cover their positions and we can see a pop on the way up. How much higher can it go? But Prashant spoke about 21,360, which is the 61.8% retracement. You coincide that with the 5-day moving average. The reason why I'm taking 5 and 10 days is because the ferocity of the rally and the fall were so much that near-term averages would make more sense than 20 or 50 or even 100-day moving averages. So we saw recovery from the 10-day moving average yesterday and above that today. 5-day moving average is something that I'll be watching out for on the frontline index. Let's see where it goes. It's been, a day of two heavyweights batting for the bulls right now, HDFC Bank and Reliance. The question is whether they can lead us into a flourish towards the end.
You're talking about F&O data, Mangalam. This is as of yesterday, and things would have changed today. FII net longs in index futures, as of yesterday's close, was some 85,000 contracts.
Yep.
I think the last time it hit, the top in July was made when this number hit the 1 lakh crore mark. I mean, it did not quite there. So we almost there. I mean, yesterday, and client, because NSE gives you client data as well, which is non-institutional. It'll include HNIs and retail, but mostly HNI, I'm assuming. That actually was extremely negative. I mean, that is, and that is also, that also happens when markets actually top out. I mean, so the data basically tells you that locals are much smarter. I mean, if you want to use positioning data, to kind of call the tops or bottoms. It's a rough kind of guide, but sometimes useful.
On that itself, the question, when we looked at all the institutional data coming in from the FIIs and DIIs, so to say, the smart money, it showed that despite yesterday's fall, they were all buyers, give or take a few, block deals, etc. They were buying in index futures. They were buying more in Nifty bank futures, which was underperforming. But the unwinding was largely caused by the HNI and clients, like you said. 22,000 long contracts by the clients were unwound. They were already net short to the tune of 44%. They, as in they were net long 44%, so net short 56%, and they fell down to further 40%. So their net short exposure is around 60%.
And that is something which is it's if you think that that's the smarter cohort, then in the sense, I mean, they're more attuned to at least the very near term. I think that's something to kind of watch out for. We'll get fresh data, as I said, later after close today. Well, how should you position yourself in the last hour of trade? Mitesh is with us with exactly that. Mitesh, what would you do?
Yeah, so we've had a good bounce back, and Prashant, I've been highlighting this that we'll possibly enter what I can understand as a choppy consolidation, because the medium-term trend, the weekly charts and the daily charts remain strong, but it's the intraday charts which are having problems. So we've had a sell-off yesterday. We had a negative opening today, but you captured it, and we are now maybe bouncing back from immediate support levels. The idea is that next few days, which is about 8 to 10 days, is what my on the higher side estimation, the markets could chop around, be in this range, but that doesn't disturb the trend. So if we broadly don't break below levels of 46, 550, 600 on the bank nifty, or levels of around 20,900, 950 zones on the nifty, then I think this trend will be on the upside, and then eventually after a few days of choppiness, we'll head higher and make a new high. So for the time being, waiting and watching on the index, but trading with stock specific biases. I have 2 buy calls right now. PCS is a buy with a stop below today's low of 37.40. Look for targets of around 3,900. And Britannia is on the radar. It's given a very strong breakout of fresh swing high there. Buy with the stop at 50.30 for targets of 5,200.
Got it. Let's talk about Masgao Docks and Cochin Shipyard. These are the 2 stocks buzzing in trade following large contract wins from the Defense Ministry. Upasana joins in with the details of these order wins. Upasana.
First up is Masgao Dock. The company gets contract from acquisition wing of Ministry of Defence for patrol vessels, and the order pertains to construction and delivery of 6 next generation offshore patrol vessels, and the size of the order is about 1,600 crores. We can clearly see the stock surging in trade today. Well, it is important to note that the company has also signed an individual shipbuilding contract with a European client for multi-purpose hybrid powered vessels at a value of approximately about $42 million. Well, next up is Cochin Shipyard. The company signed a contract with Ministry of Defence for short refit of Indian naval ship for a value of about 488 crores. The work package includes repair and maintenance of equipment and systems on board the naval vessel. Well, the work on the same has been already commenced during Q2 FY24 is what the company has said, and it is expected to be completed by Q1 FY25.
Upasana, thanks a lot for that. There's another stock which has been buzzing around, and it also falls into the PSE basket that Rima was talking about at the start of the show, is BEL. It's been a buzzing stock this year itself, and it's gaining today as well. We spoke to the management earlier, and they too remain very optimistic on their order book growth. They've upped their guidance as well. Let's hear out what the management had to say to us.
We stand at around 23,200 crores of order book in this financial year. Thanks to the speed with which MOD has been working, we met the guidance and reached 23,000. A few more orders are in pipeline, but then it depends upon when, at what point of time they will fructify. One is that EW system for ships, which is around 2,000 crores, which is in pipeline, which we expect to be fructifying in this financial year. Some smaller orders may be there. So seeing in pipelines, we expect to cross around 25,000 crore in normal course.
All right, that's one of the big movers in today's trading session. We're also seeing some, momentum come back in the metals end of things. Yesterday, it was hard hit. This pack, Hindalco has moved to the high point of trade. Among the top FNO gainers right now, we do have big moves coming in from a couple of these metal names. Hindustan Copper, for instance, is up around 11%. Nalco is the other one, which is up 5%, along with NMDC. So let's see where these go from here. We do have Devin Choksi, who joins us now. Devin, good afternoon. Looking like a lot better screen than what it was yesterday, same time, where there was a bit of a panic that had set in. But understandably, now the market's got a bit of a cold towel treatment. Your thoughts on these PSE stocks now? BEL, for instance, has upped its guidance. They say that the government is working at a frenetic pace, and as a result of which, their order inflows are higher than what they anticipated.
Yes, Mangalam. Good afternoon. Well, certainly, if yesterday was all red marks, I think today the blue marks have returned back. So, which is good actually as far as the market is concerned. Maybe yesterday's fall was quite sharp because of some very sharp selling taking place from the FI side. And that was possibly the reason for which I think the market tanked. Along with, I think, some amount of losses, I think, triggered. The fall was quite, I think, extensive. But all the same, I guess I think the underlying tone in the market remains absolutely convincing, absolutely strong. The domestic investor side, including the family offices and HNIs, they have been buyers in every fall in the market. And that's what is, I think, more important. So we are practically giving a good amount of counter balance to the entire FI selling which is taking place in the market. Having said that, on the PSE stocks, I believe that the good amount of Ministry of Defense's business is coming into so many names, including the shipyard companies, including the companies which are in BL kind of companies which you mentioned. I think they all have started receiving significantly large size of orders. Up till now, in last couple of years, if you would see, I think the performance of these companies have remained quite erratic. Even though order book building has happened in past few quarters, I think the business has not probably picked up as much as it should have. Fortunately, I think this time around the Ministry of Defense is putting in larger emphasis on execution of these orders. So hopefully, I think this company should result into better execution in subsequent quarters. I think except BL, Mazgaon as well as Cochin, the valuations are adequate at this point of time. So there is not much of a, bargain left, at least as far as the valuation is concerned. But in case of BL, probably I think the valuations are not so expensive as compared to what we see in case of Cochin and Mazgaon. So to a greater extent, I would think that the BL would have a little bit better time going forward as far as their outlook on delivery of the execution of the order is concerned. And at the same time, the valuation gives little better comfort compared to the other two.
Right, just keep an eye out on Varun Beverages. That was one of the big movers in yesterday's trading session. Today, it opened lower, and from those lows, the stock has taken off. It's up 7.5% from today's lows, currently at the high point of trade. Today, we did speak to the management. It's been a big wealth creator, and on the recent foray that the company had in terms of an acquisition of a company in South Africa, we spoke to them on various things, and here were the key takeaways that the management said. One, the Pepsi market share in Africa is close to around 2 to 3 odd %. They can triple it in the next 2 to 3 years. So that is a big positive. EBITDA addition immediately from this deal in the next year itself will be about 250 odd crores. That will be on account of higher salience of Pepsi coming in, because currently, the company that they've acquired, 80% of their volumes and revenues coming from non-Pepsi brands. So higher salience of Pepsi would mean better margins and better revenues as well. The EBITDA could increase by 250 crores. On India business itself, they expect the India business to continue in double digits in terms of volume growth with 22 to 23% margin. No capacity headroom as well. Last year they had a capacity headroom or rather headwind, and now they've added close to around 45% capacity for the next year. And this capex itself can yield additional revenues of nearly 3,000 crores for the next year itself. Sting, the product that we're talking about as a volume driver, was 7% of volumes last year, will be 20% this year, and they've launched a new variant which has done well in the market as well. And finally, they ask about headroom for growth in India. The overall FMCG universe in India is 11 million outlets. Pepsi sells only in 3.5 million outlets. So the next leg of growth for them will be increasing their direct market reach. And if that were to happen, they can triple their revenues from here itself. That's about Varun Beverages. On Devyani as well, they said that, they are looking to expand their presence. 250 stores this year is what they've added, 250 to 300 next year. Even though consumer sentiment hasn't fully recovered, they are investing ahead of that. And on their Thailand foray, they said that, there is strong potential in the Thailand market, and they aren't taking away from any Indian allocation or Indian management bandwidth. It is separate because they saw that as an attractive opportunity.
But do they want to expand a lot more in Thailand or any other overseas acquisitions or geographies?
Thailand, as of now, they did not comment on others. In fact, what we'll do is we'll hear out what Mr. Jaipuria had to say to us on Varun Beverages as well as Devyani.
We expect to grow at a reasonably fast pace there. So this should be, I would say it will add about 200, 250 crores additional to the EBITDA margins to the India business we take, but it'll be funded from our internal accruals actually. So it won't be 1,320 crores will not really make a dent to the overall, because the EBITDAs are large enough for our next year EBITDA will more than comfortably cover it.
Okay, another stock which is on our radar is Piramal Enterprises. In the last 2 or 3 trading sessions, The stock has fallen close to about 10%. Today, too, it's down 1.7%. The company's announced that they will be making a provision to the tune of little more than 3,100 crore due to its exposure to AIFs. Deven, you want to comment on Piramal Enterprises? At what point do you see fair value in Piramal Enterprises?
Well, as such, I think the company remains sound from the point of view of the fundamentals. Well, I guess I think the AIF-related news which has come, which is still lacking a lot of non-clarity. As far as I think the size of exposure that these companies are having into the product, which RBI has basically asked them, probably in 30 days' time, they will ask them to reduce the exposure. So from that perspective, I think nobody is clear, and neither any company has, I think, given the larger part of the clarity on this subject. But market has reacted, of course. So maybe I think I would like to get the numbers first coming from the company before which I put a comment. But fact remains that the fundamentals of the company remains otherwise very strong from the perspective of looking at the business.
Okay. You know, what we'll do is, Deven, stay with us. We'll take a quick commercial break here. We'll come back. We'll have Ronak Onkar, co-fund manager, equity and head of research at Parag Parikh Financial Services Mutual Fund, joining in on the other side. More coming up. Stay with us.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Welcome back. Banks are soaring. The Nifty Bank has added on 450 points, and all those gains have come in practically in the last 30 minutes. The Nifty Bank is now outperforming the frontline indices after lagging for a greater part of the trading session. There you have that up move. 1% gain now on Nifty Bank, and individual names. And ICICI Bank was trading in the red through the day. Till 2 o'clock, it was down 1%. Now it's up 0.3%. IndusInd Bank has a rally of 1%. State Bank of India has surged 1 3/4 of a percentage point. Axis Bank is trimming its losses. HDFC Bank and Kotak Mahindra Bank are all adding on to their gains. And now banks are firing for the markets. And that's pushed the Nifty to a triple-digit gain. 110 points on the Nifty right now, a 0.5% rally, with the sensex inching towards a 400-point up move. So banks are doing well. Ami Organics is the other stock that we're tracking very closely. 12% equity changed hands in a block deal earlier today. Nimesh joins in to bring us more details on this deal. Nimesh.
Hi, reminder, the stock has recovered from the intraday lows after there was a large block. Almost 12% equity got changed hands. And I understand the ex-promoters now, which have been classified as the public holders, they were the sellers in today's block. Now, the combined holding of that public entity is close to 18%, 17-18%, and they've sold 12% in today's block deal. So, not sure whether it's we can call it a clean out trade, because they'll be left with 5%. If they want to sell further or not, we don't have a clarity on that. In terms of buyers, I understand a couple of domestic mutual funds, a leading AIF and a leading wealth firm was a buyer in today's block deal. Interestingly, even the existing promoters have bought a very small stake, is what I understand, in today's block. So that's the reason why I've seen a bit of a recovery as well. But as I said, the largest public shareholder, which owns close to 17-18%, they were the sellers in today's block. 12% sold out to large funds and to the existing promoter as well.
Right, Nimesh, thanks a lot for that. So that's about Ami Organics. Thank you for bringing us that scoop. We will, of course, await official details coming in from the exchanges by evening. Just keep an eye out on a couple of these logistics stocks. They've been surging. Snowman Logistics at the high point of trade gained about 8% off lows. Remember, this one has a ready buyer always in the form of Gateway Distriparks, which is the promoter. Multiple times, they've bought this company in the past, and they've told us as well, whatever spare cash promoters have, will go ahead and deploy it in Snowman Logistics itself. The other one is Delivery. Now, yesterday, there was a note that came from Macquarie. The stock was under pressure all of last week, but margin expansion is expected out here, along with growth in overall PTL volumes as well, part truckload that is. So, Devin, your thoughts on, these logistics names? Do you fancy any of them? I think you're on mute, Devin. All right, I think he's, we've lost connection with Devin there, though nevertheless, we'll thank him. And All Cargo Logistics is the other one. They reported their November monthly volumes, and there was a decline of about 0.1% year on year, and month on month as well, it was rather flat with a grim outlook. But nevertheless, there seems to be some buying out here. All Cargo Logistics is the other one which has moved to the high point of trade.
Nimesh would put Delivery on his chatter list as well, saying that some buying in the FII desk and high delivery volumes, etc. as well. So maybe on at least Delivery there is part. Delivery is, as Mangalam pointed out, it's largely, if you want to play on a listed play on e-commerce, right? The growing e-commerce penetration and that doing very well. I think Delivery is a good play. Towards that. It's actually one of the few stocks, not one of the few stocks, probably the only ones which has not had any meaningful rally from the lows. They all came to the market, suffered large sell-offs. Most others have had, pullbacks, but Delivery also fell the least. It has to be said. Nykaa, of course, is the other one, which remains the worst performer out of the so-called new age stocks in that sense. Ronak Onkar is with us, co-fund manager, equity and head of research at PPFAS Mutual Fund. Ronak, good afternoon. Great to have you with us here. Thanks very much for your time. Days like yesterday come. It's a reminder that it's not a one-way street. Sometimes there is some give back as well. What did you do with the fund yesterday? Were you all, was the team Buddha-like just watching what was going on? Or did you react, do something, buy something which was sharply lower? What was the reaction function yesterday?
Thank you, Prashant, for inviting me again. So I think you mentioned it correctly that these are reminders that ups and downs are a feature of the market, and we should not be perturbed just because the market suddenly fell or suddenly went up. So interestingly, we have a list of companies we keep monitoring, and within that we keep buying. So what we actually did, you will come to know in the fact sheet of the November ending month. But the laundry list of companies continues to be there. If something is of reasonable valuation and it's in our target radar and it comes in that price range, we are happy to buy it.
Do you think leadership is intact now with the PSU banks even going into 2024, the first half at least? Or do you think the run-up has been excessive and we could see some rotation change in the leadership?
So the way we have been positioned in our banking exposure has been to take exposure to the private sector banks only and only the top private sector banks. We had a few reasons in the past because PSUs, if you see over a long period of time, only a few of them really had a good operating history, and that too was not at par with some of the private sector banks. And this multi-decadal trend of private sector banks taking over market share still continues to go on from PSU banks. So in the portfolio, we've never had PSU banks, but I think the private sector banks, if you see from the COVID lows until now, most of the balance sheets have been very clean. The companies have a very long runway of growth. And if you see some of the regulations, they are in fact benefiting banks with scale. So if you have digital tools available to onboard customers, if you have a very clean balance sheet and management who understands the scalability and opportunity available, I think most of the private sector banks can play through that opportunity.
PSUs in other sectors, defense, railway, power, these are stocks which have done well in 2023. Would you bet on this cohort for 2024 too?
So we already have investments in the power theme out of the three themes you mentioned. So we own Coal India in the portfolio, we own Power Grid, and we also own IEX. So far, we have found these were the reasonable place to make when it comes to the power sector. But it was never a macro decision. It all came through a culmination of individual choices we made. So we liked Coal India independently, we liked Power Grid independently when we first bought it, and we liked IEX independently. It so happens that the theme has now gathered people's attention, and rightly so, because if you see the past decade, power sector has been the theme that was supposed to happen for a long period of time. And suddenly the last couple of years, we have seen the valuations re-rating, the businesses doing well. So it's good to see that a major sector in the market is doing well.
All right, that's interesting. You know, as we speak, something very interesting is happening in the market. The Nifty is holding on to that 21,250 mark as a resistance, perhaps because of the call writing that is there at the 21,250 mark. And this despite the Nifty Bank haven't taken off. When we started the show, the Nifty Bank was an underperformer. The Nifty was sitting with a gain of 0.5% and the Nifty Bank was up just about 0.1%. But as you see, you know, the clock struck 2:30. We saw the Nifty Bank take off. The Nifty is still straight at around that 21,250 mark itself. So that's telling you maybe a bit of the expiry factor is playing out. With the Nifty Bank having moved higher, why is it that the Nifty is not moved higher? Because a couple of stocks which are weighing it down. We have ITC, which is a fair weight on the index, which is lower. A bunch of these IT stocks also have moved lower. So, you know, that baton has shifted from some of these heavyweights which are doing well, dragging the Nifty down. And we have Nifty Bank, which has moved higher, which keeps the Nifty unchanged around 21,250. Ronak, your thoughts on diagnostic companies? They've been doing well for the last few trading sessions. In fact, the last month or so, the management commentary that we've heard so far is that price wars are out now and they're behind them. And this morning, we got an update on Vijaya Diagnostics as well. They went ahead and bought another diagnostic company. So there is M&A in this space too. What are your thoughts? Do they make for a good investment bet now at these levels?
So if you see the long-term opportunity of medical services, diagnostics included, is quite significant. So all the metrics, if you compare to even similar sized Asian companies in terms of GDP per capita, you will see India is underpenetrated in terms of having diagnostic solutions available to citizens. So the long-term trend remains to be very strong. But ever since these companies have been listed, the valuations have been quite in the higher band. So we study these companies, we keep track of them, but so far we have not found it to be reasonably priced yet.
Okay, Ronak, you said that you'll find out in the November fact sheet what we've, the December fact sheet, right, what you've done. But tell us a little bit about, outside of financials, what are the other themes that you really like I know you can't name names, but talk to us. We have your last portfolio, I mean, what you own, but talk to us about that laundry list that you spoke about, which you keep and at lower levels, whenever you get opportunities, you buy. So what's in that?
So most of the companies we already own, they also tend to become reasonably priced sometimes, and we keep on adding there. So last we've added is in technology services, in the foreign stocks, wherever we could deploy dividends, we have deployed over there. So we feel that a technology adoption theme is a very longer term theme, and there are multiple ways to play it. One is to directly buy stocks which enable technology services like IT services companies from India. And the other way is to buy the larger cloud computing players, the software providers who are globally listed, and they provide you a window into the enterprise spending of all these technology services. So you buy across the supply chain of technology providers. Then I mentioned private sector banks is something we keenly look at in adding. And any other stock in the portfolio, if it is reasonably priced, we continue to keep adding over there.
So that overall cap in terms of buying foreign stocks, that is not there anymore, Ronak, or I mean your limit for you opens up?
No, so the limit is not opened yet. So whatever money we have already invested in foreign stocks, that stays outside. And if we at all earn any dividends, we can reinvest those dividends.
That can
back
be reinvested. Right. And you're saying that you put money to work in a company, foreign tech company, basically.
The same portfolio companies that we have, we keep adding them.
Okay.
Yeah.
You don't have Apple in your portfolio. I see that because your fact sheet says that there is Microsoft, there is Alphabet, there is Amazon, there is Meta as well. I'm surprised that something like an Apple doesn't find space in your portfolio. What's the reason?
So many years ago, we bought Apple. It was very, very attractively priced. And I think after we bought it, similar time the news came in that Berkshire Hathaway also was buying and already bought a stake in Apple. So the price over the next few weeks shot up so significantly that we had to pause our buying because it went out of our comfort zone of buying. Then I think within a year's time, it promptly doubled. And so we thought, okay, it's a hardware player. It cannot sustain the valuations over a bit of time. The base rate of the valuation staying this high was not there. So we sold out of it. It turned out to be a mistake in hindsight. But yeah, we used to own Apple in the portfolio.
It's interesting, that's what distinguishes Warren Buffett from us mere mortals, where, he thought it was outside of his valuation zone, and understandably so, but Berkshire continued to hold it, and currently, right now, it's their biggest portfolio bet.
I think it contributes, I think about 50% of the portfolio, listed portfolio is Apple, just because the sheer performance of Apple.
When we look at a stock like Zensar, it's been one of the big movers. This year, it's 190%, and it's shot up 7.5%. We chatted with the management earlier this week, and one of the key things that the street likes in the last 1 year, 190% year to date, is the kind of improvement the new management has brought in. There is a new CEO on board. He took charge about a year back, Manish Tandon. So that was reason number one, a management change. Two, he brought about margin improvement. It was a low-hanging fruit. Margins for Zensar had fallen to single digits, 8.5% a year ago, and he's brought it to about 18.5%, and he wants to sustain it in mid-teens. So that's been, the value he's been able to extract in just about 1 year. And he's also looking at, improving the BFSI contribution because it's lower than the industry average. Revenue growth, too, for the company has steadied. Ronak, anything in IT or the new age tech companies that you like?
So if you think the mega caps globally are new age tech, then we already own them. And in IT, we are positioned only in terms of our exposure to large IT services companies because they give us a very diversified exposure to all the verticals which are available and which are digitally transforming over a period of time. We would prefer to have a diversified view rather than going with niche players. So we used to own Persistent, which was a niche player in the past. We also used to own Emphasis, which was a BFSI-focused mid-cap IT services player. Most of these stocks had rallied quite significantly, and they actually went far ahead of their long-term valuation ranges. So we had sold out from the mid-cap IT companies, and now we are investing only in the large-cap IT services companies from India.
And you're still convinced about IEX, is it? I mean, a lot on the street are worried about what happens when market coupling comes about, and the fact that it's a near monopoly right now will get distributed. You still continue to hold your conviction here?
So it remains to be seen how it actually impacts. I'm very much interested in understanding how it impacts over a long period of time. There are two trends which are looking very interesting for the power exchanges. One is the network effect of the existing exchange. Can it be easily dismantled? That is number one. And number two, what is the long-term volume growth of power units traded on the exchange? So when we are seeing renewable energy becoming a larger part, it cannot be traded the way your regular thermal power is traded or with PPAs. So you need to have a shorter term arrangement, and an exchange is a good way to discover the price and make sure the allocation happens seamlessly. So that has been working very well. So we are trying to dismantle the system which is already working very well. So again, it remains to be seen how it plays out. But so far, we think that the longer term trend favors an exchange which has already been there and has all the technology and the right network connections already in place.
All right, Ronak, we'll leave it there. Thank you very much for your time. As always, appreciate you joining in, and it's great speaking with you. If you don't speak again, I wish you all the best as we wrap up this year and head into 2024. From all of us here to all of you there.
Thank you.
Thank you very much. Well, we'll take a quick commercial break here. We'll come back and we'll get you a check on what's happening in dealing rooms. Nimish is going to be with us for that, and we'll get you some near-term trading ideas with our technical experts. Stay with us.
CNBC-TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter century of excellence.
Well, the 3 p.m. move on the Nifty has been to hold on to 21,250 as a resistance mark. So it's now about 20 points away from there. It's on account of HUL, L&T, Bajaj Auto, all these names which have moved off the highs and currently at the lower end of today's trading range, which keeps the Nifty in check, despite the Nifty Bank having moved well above that 47,800 mark as well. There was a big fall yesterday. There is some recovery today. What are the dealing rooms making of that? Our favorite segment, D Street Chatter, comes alive right now with Nimesh getting us an insight. Nimesh.
Hi, Mangalam. Good day of trade. It's a good recovery from the lows of today's trade. But again, it's been a very volatile day of trade. If you ask a trader, he will say that it's a very difficult market to trade. The kind of moves you've seen every 10 minutes, the Nifty would move fastly 20-50 points. So that's the kind of a trade in today's market. From a flow perspective, again, it's a mixed day of trade. But a bit of bias towards the large cap is what I understand from a flow perspective from the larger FIs. The good part is the broader markets have also recovered in today's trade after the sharp sell-off. The index is up more than 0.5%, but a lot of individual names have attempted a good pullback in today's trade. But again, the way the PSUs have moved, it clearly suggests that the leader of this bull market is with the PSU. So entire PSU basket is buzzing in trade. The PSU banks, the PSU power companies, the index PSU index is up more than 1%. But a lot of individual PSUs are gaining in today's trade. So again, from a flow perspective, a mixed day, but it's been extremely volatile, and that's been a difficult part from a trader's perspective.
Nimesh, good afternoon. In terms of individual names, what's on your list?
Hi, Prashant. So in terms of individual stocks, the first stock on my list is Indo Borax and Chemicals. A small company we normally don't talk about, 650 crore market cap, been buzzing off late. Today is up 6%. This month the stock is up, gained nearly 20%. I understand the street is anticipating some sort of a corporate development in this company very soon. So that's the reason why that stock is excited off late. The second stock is Delivery. Mangalam spoke to the management few days back. There were some reports as well, non-deal roadshow reports, and looks like some bit of interest seems to be back in that particular stock. So for the third day running, the FI interest is quite high, so expect high delivery volumes in Delivery even in today's trade. The third name is Maruti. Nothing specific, but for the last many days, the feedback is some bit of institutional interest seems to be weighing off. There is a large long-only investor who's looking to trim the position in Maruti, and that's the reason why that stock has been under pressure, and that's the case today as well. And the last name is Shyam Metallics. It's been part of my charter list few times. Every now and then there is an anticipation that the promoter block will come very soon. The promoter holding is quite high at 81.5%, and they need to bring it to 75. So the stock is buzzing in trade today. It still looks like some bit of HNI action is back, but the trigger would be the promoter stake sell just to bring it to 75. That could be the next big trigger to watch out in Shyam Metallics.
Indo Borax, right? That's a new one. So it's always interesting to hear these names. I was on the website. They say that I mean, in the industry must be pretty well known because it says Indo Borax is synonymous with boric acid and is referred to as the industry standard for many comparisons made in the industry. You refer to the market cap 650 crores. Anything else you can tell us? Who is the counterparty?
Let it be, Prashant. But I'll just briefly talk about Indo Borax. I was just reading a bit on that company. It looks like they're one of the leaders in the boric acid, boric powder businesses. That's one part. And I was just looking at the numbers as well. A small company, but they have an operating margin of 30%. That was a bit of an eye opener for me. On a 250 crore or 220, 230 crore top line, they've reported almost 30% operating margin in FY23. So margin looks good. I don't know if the company is getting bought over, but there is a chatter of some corporate development, and that's why the stock is also rallied 20% in this month.
It's incredible. Indo Borax. I remember yesterday he brought up Taneja Aerospace. And then before that there was, I remember...
Taneja is a well-known, if for those who tracked the 2004 to 2007...
I was in school that time, Prashant. I'm sorry.
You make me... Taneja used to, I'll tell you, Mangam, Taneja used to be, because it was a real estate bull market.
Yep.
And Taneja is, I remember Bangalore. I don't know what they do. So there used to be aircraft repair, etc. There were a lot of land in Bangalore. So it used to buzz and it went up like mad on the value of that real estate. So that was the story with Taneja Aerospace. But you're absolutely right. I mean, we get to hear something completely new with Nimesh.
And today the wordplay was delivery volumes in delivery. All right, let's move on and let's get you the tomorrow trade before we shut shop for today. Mitesh Thakkar joins in. Mitesh, yesterday it was a sell today, buy tomorrow. Today, is it a buy today for a reverse trade tomorrow?
Mangalam, I have a mix of calls, one buy and one sell. Oro Pharma, it actually was giving a breakout yesterday and then it kind of tapered out, but today it's recovered its mojo. closing at the swing high, breakout of a consolidation. So BTST here with a stop at 1079 for targets of 1115. And Bajaj Auto, after a long up move and run, seems to be giving first signs of a correction or a negative crossovers on the hourly and the 2-hourly charts. So that's an STBT. Keep a stop just above levels of 62.65 and look for 61.80, 61.75 as your target for today.
Okay, all right. Amitesh, thanks very much for that. Ambrish Baliga is with us now to walk us through what's happening in the market. There's about 15 minutes to go for close. Ambrish, good to have you with us here. Let me just attack what is on your mind straight away. Indian hotels is your pick. Tell us why. I mean, actually, we don't need a reason why. It's December, holiday season, but go on. Yeah.
Absolutely. In fact, I recommended this about 3 months back, but now I'm revising my target upwards, clearly looking at the performance and the occupancy levels. It's the best known Indian luxury hotel brand. And in addition to Taj, they have brands like Selection, Vivanta, Ginger. And I mean, all of this put together is about 33,000 keys across about 270 properties, including the pipeline ones. They should, in fact, be opening 15 new properties by the end of FY24, which means in the next three months and 2 weeks, they should be opening 15 more properties. By FY25, they should cross 300 hotels, and they have adopted an asset-light strategy. So currently, about 50% of the hotels are under management contract. The average room rents are at lifetime highs, and the best part is it is sustaining. It's just not a blip. And if you look at the Q2 occupancy, like I said, it's above 75%, which is extremely good. And December continues to be good, as usual. Virtually, debt-free at the net level, if you look at the net debt to EBITDA, it's about 0.5. So going ahead, in fact, I see the revenue CAGR to be about 15%, at least in the foreseeable future, next 3-4 years. EBITDA CAGR should be about 20%. So expecting an EPS of 11, I mean, earlier I was expecting an EPS of 10, upgraded to 11 for FY25. So my target price also has been revised to 520.
Okay, let's talk about the IPO market, because 2023 has clearly been the year of the IPOs, and in the last few days we've seen a lot of companies rush to Dalal Street. Yash is joining in to explain the demand and also details on the recent listings. Yash.
Well, Rima, as you pointed out, absolute IPO rush as far as the Dalal Street is concerned. 12 companies would be launching the IPO in this week itself, raising about 4,600 crore rupees. 8 companies on top of that will get listed on the exchanges in this week itself. Let's speak about this week's IPO saga in the form of Kal, Aaj aur Kal. Speaking about the IPOs which closed yesterday, Suraj Estate, that IPO got subscribed 16 times. The company intended to raise about 400 crore rupees. It received demand for 6,400 crore rupees. Moti Sons, again stellar subscription. Total IPO subscribed 160 times. The company was intending to raise about 151 crore rupees. It got demand for 24,160 crore rupees. Muthoot Microfinance, total IPO subscribed about 12 times, intending to raise 960 crore rupees, got demand for 11,520 crore rupees. Let's speak about Aaj, the IPOs which closed today. Credo Brands already subscribed 13 times. HNI Retail subscribed 29 and 14 times. The company intends to raise 550 crore. The price band is 266 to 280 rupees a share. Happy Forgings, it's already subscribed 16 times. HNI subscribed 36 times. Retail at 11 times. Fresh issue of 400 crore rupees. Price band of 808 to 850 crore rupees. Now let's speak about Kal, the IPO which closes tomorrow. Azad Engineering, the price band is 499 to 524. The company intends to raise 740 crore rupees. And the IPO is, the HNI portion is subscribed 13 times, retail 8 times, employee portion subscribed 4 times. It practically feels like there's no day 2 and day 3 for these IPOs, because they're having very strong subscription, oversubscription on the first day itself. And not just subscription, look at the listing also. Today, Inox India listed, the IPO price was 660 rupees a share, listed at 950 rupees a share, a premium of about 44%.
All right, Yash, thank you for breaking down the Kal, Aaj aur Kal of the IPOs. So what I'm waiting for is Kal, which is a Friday, and thereafter will be a long weekend as well. You take a short break, come back, focus on the markets, and talk about market close too.
CNBC TV18, embarking on a quarter century of excellence. CNBC-TV18, embarking on a quarter-century of excellence.
Welcome back. Look at Indo-Borax, 12% higher. I think when Nimesh was talking about that, the stock was up about 7% or so. It's moved up sharply since then. I think Amrish tracks this one. Amrish, you have a view on this one? Indo-Borax, you heard Nimesh talk about it.
In fact, I used to track it a long time back, and it's just been a 350, 400 crores sort of a market cap company. Only now it's moved up to 650, 700 crores, because of which it was clearly off the radar. And just when Nimesh was talking about it, it just struck a bell, and I started, just checking out as to what they are doing currently. And I was quite surprised to see that there's a product called lithium hydroxide monohydrate, which they manufacture, and this is used for cathode. This is used to make a cathode active material for lithium-ion batteries. So I think this is what possibly is pushing it up. Whoever has seen that earlier possibly is buying it from this point of view.
What about AMI Organics? So that's another one Nimesh was telling us. He was giving us details about that 12% block deal. And look at the way that stock has surged, 8.5% up on that. Ambrish?
No, I've not really tracked AMI very closely, so difficult to give a view on this.
Can you repeat the big word that you said? Lithium hydroxide. What is the third word?
Lithium hydroxide monohydrate.
I think for people who can pronounce this, remember this, and know exactly what they do, they deserve the returns that they get on these companies anyway. Because
Mangalam, your better half can pronounce this.
Most definitely. The only thing that I got from whatever Nimesh said was boric acid and boric powder. And I remember as children we used to have carom boric powder.
And used to put that
smoothen all the strikers, etc. But this one's got the queen with the cover.
Do you now remember the word? Do you want to repeat it?
Lithium hydroxide something. I don't deserve the gains on this. All right. I think, I'll stick to names that I can speak about. Zomato, that sounds interesting. You were talking about Indian hotels and the December trade and all of that and stuff. Most people order a lot of food in their houses, and we will obviously see Deepi Goyal and others from Swiggy as well keep talking about this as we move to the new year, the big bang end of this year when it comes to ordering food. Do you think this trade now makes sense now that the company is profitable in its own core food business as well? Any incremental orders would aid their EBITDA?
Absolutely, and clearly, at least about a year back, we were wondering whether there'll be some other competition coming up. But then it's very clear that this trade is dominated only by Swiggy as well as Zomato, both having more or less equal shares, and the market is growing by the day. So I really don't see much of a downside for Zomato. Any sort of a correction, any sort of adverse news, like for example, we had a sort of adverse news as far as GST is concerned, some GST demand because of which the stock had corrected. All those times clearly is a buying opportunity for Zomato because the road to profitability is decently clear now. So it should go back to those levels which we had seen post-IPO, which again I'm talking about 170 to 190 sort of levels.
Look at Rima rate gain, if you can have the intraday up. Very sharp surge, starting about 320 or so, 7% higher, 7.5% higher. It's almost, I think, back at, should be fresh highs, right? Today.
Yeah, it's a fresh 52-week high.
740 now, it's almost 750, by the way, is the high for the day, and it's almost there. So, for the last couple of days, actually, since the up and up kind of sort of rally on this one, that was early November. But then it went into a bit of a funk, did nothing, but it's basically back at new highs on a rate gain. So that's
this is also another company which is growing very, very fast. In the last quarter,
the guidance is 30% for the next 4 years, 5 years, something, right?
So this year their guidance is 65%. Which includes an inorganic, it includes an acquisition. But the company, I think, has given a guidance of achieving $1 billion in the next, or doubling their revenues in the next, 4 years. So they're penciling in very strong growth, and they're winning a lot of orders too. But counting down to the close.
Well, absolutely, and it's going to be a good close, 120 points higher. So basically, 1/3 of yesterday's. If you take from day before yesterday's close to yesterday's close, it was a 300-point cut. You basically have recovered about 1/3 of that loss. 21,274 is where the Nifty finally will end at. Take a look at the Nifty Bank, which was kind of a late starter, but it made up. The rally really began on the Nifty Bank at, in right earnest, about 235. Actually, started as a 230 move here on the Nifty Bank. That also ends about 0.75% higher. That's about 380 points. And the mid and small cap parts of the market, wow, I mean, the mid cap index, sharp move up, 2:30 p.m. onwards, actually. Very sharp move up. We started with a 1% gain. We end with 1.7% on the mid cap index. And the small cap index ends with a full 2% gain. Again, it's a 230 kind of mover. To be precise, I mean, the rally started at 215 and we ended almost at the day's highest point there. So just spectacular gains. And I think the small cap index with a 2% gain is back at the middle of yesterday's sort of big bar. So bodes well as we look ahead from here. Rima.
Pull up the contribution plate. HDFC Bank and Reliance Industries together are contributing 80 points out of the 120-point gain on the Nifty. So 2/3 of the Nifty rally today is courtesy these two names, HDFC Bank and Reliance Industries. And Reliance Industries has been strong, 1.3% higher for the day. And this week, which includes yesterday's wobble, is up 2.7%. But mid-caps is where the action is. Okay, mid-caps is where the action is. The advanced decline ratio also closing up with about 4 stocks gaining for 1 stock declining. We're going to leave the Nifty higher by 130 points, 21,280, with the sensex just shy of that 71,000 level. With that, it's a wrap and closing bell from the entire team. Thank you for watching. Markets Forward comes up next.
CNBC-TV18, embarking on a quarter century of excellence.